Hi guys, we're now live on our first episode of Investor Chat, the channel dedicated, for the investment community of private investors out there looking to generate a slightly better return than just investing in your standard savings account. And today we're talking about episode 1, which is escape rooms. Is there a market opportunity in investing in escape rooms? And we've got a presentation, and I'm going to be talking with my friends and fellow investor Anthony. I'm going to be inviting him into the studio very shortly. I have actually got a deck that I've prepared and done some research. Feel free to comment. This should be going broadcast live to our Facebook and Twitch, and will be uploaded to YouTube. So do feel free to comment. We will reply to comments as and when we see them, and let us know what you think. So in a moment, Anthony will be joining. This is the first time we're using this software, so bear with us if there's any technical glitches. But in a moment, Anthony will be joining us. In the meantime, a bit about me. My name's Jake. We will do an intro into both of us in another video, so you can see our backgrounds. But in general, I've been investing since about 2006-07. We're now in 2021. I'm a private investor, and I'm self-taught, if you like, as is Anthony. And a lot of the colleagues that I'll be bringing on to Investor Chat. Investor Chat is a platform where I'll be interviewing, discussing, reviewing, analyzing market trends, stocks, the markets, etc. A place and community for us all to share our opinions, learn from each other. Disclaimer, which is also be in the presentation, that I'm not a financial advisor, nor is it Anthony. This is our opinion. We are active investors, but you must do your own research. And if you want to get a valid professional opinion, then definitely consult a financial advisor. Here is Anthony. So I'm going to add Anthony to the stream. How are you? Can you hear us okay?
Yeah, good, thank you. Loud and clear.
Yeah, very good. I've just done a short intro. I didn't intro yourself, so if you want to give us 10-20 seconds about yourself, maybe your investing experience. We will do a fuller video some other time, which will be uploading where we'll both introduce our full background. But if you want to shortly introduce yourself, that'd be good.
So I started following shares back in about 2008 or so, just before and during the big crash at the time. Gave my father a few tips on things to buy that looked good value, like Apple, Google, and Baidu back then. Suffice to say, they performed very nicely in the interim, but I didn't really know that much. Started on my own share portfolio a couple of years later, then had to pay a tax bill, sold it all, took a few years out, and have been getting back into the market more recently. I'm quite an avid investor, probably read at least 30 minutes a day typically, or on sites like Seeking Alpha, and some other authors that I like to follow.
Fabulous. And we'll go into each of our stories, but it sounds very similar. Actually, I just mentioned to the audience that I started around 2007. I started with a fake portfolio in 2005-06, and then started investing just before the crash, actually, which is a shame. But anyway, I've been investing on and off since. So today we're going to look, I guess, for the people on the broadcast, we are broadcasting live to Twitch and to the Facebook page, which was created very recently. So I don't know how many people are watching it at the moment, but either way, if you haven't already, have a look at those. I'll be popping them in the description below. So make sure to follow us on YouTube, Facebook. If you're a follower of Twitch and Discord, they should be there too. This is a chatting platform, and it's always interesting for us to know your opinion. So throughout the presentation, feel free to comment. Let us know your opinion, whether you have been to an escape room yourself as a participant, whether you own one, whether you're considering creating one, or indeed your opinions and thoughts on our particular thesis today. So without further ado, I've created a presentation, which is kind of typical of the research that I do when considering making an investment. All cards on the table. I made an investment in this company about a month or two ago, and it has gone up 150% in that time, which is not bad. But I didn't do as in-depth research as I have done in this presentation. So I'd love to hear what you guys think. I'm going to share my screen now. Caveat, I am working from one screen at the moment, so there might be a bit of a funny moment now, just while I get the correct window up. But just give me a moment. I'll get the deck. Here we go. Anthony, can you see this presentation? Yes. Fabulous. So yeah, welcome to Investor Chat, guys. This is one of the style of videos we're going to be doing where we deep dive into an investment thesis. And in today's show, we are going to be looking at escape rooms. Just to kick off, we are not financial advisors. Our disclaimer: all information in this video is for edutainment or entertainment use only. We may discuss our own trading and investing, but it's not an endorsement, advice, or in any way telling anyone to do anything. Instead, everyone has their own risk profile and must make their own decisions. So without further ado, feel free to read that in depth. I'm going to kick in to this presentation. Anthony, at any point, feel free to ask any questions. I will pause before going on to the next additional slides to give any room for questions. However, I feel that a lot of the questions should be answered throughout this presentation.
I just wanted to say that although I do have a portfolio with 20 plus different shares in, Escape Room is not currently one of them, though I could well decide to buy more of any shares in the near future, but not currently holding this one.
Yeah, so great. Yeah, so just to clarify, the space itself is Escape Rooms. The actual company is called Escape Hunt. It's just one of the providers. I'll talk a little bit now about the market. So the market size is actually quite large. This is a 2019 study. It's the most recent I could find. So the total market from 2019 was around 3,000 games in Europe and 14,000 worldwide. Now, there was growth in 2020. So I've kind of come up with a guesstimate estimation of about 15,000 worldwide. Okay, and now the number of rooms or games in each store might vary. But if you imagine most escape rooms might have a couple of games, as well as maybe a cafe and another, reception or whatnot. Locations can add rooms to current locations. For example, a store might expand or use additional space or chop up space. And in this study, 68%, 2/3 or just over, said they would add more rooms. So that's a potential kind of growth area. And there'll be loads of growth areas that I'll mention in this deck around Escape Hunt. According to the study, the return on investment is within a year, which is 100%. Now, obviously, Escape Hunt, the actual business, I'll dive into a bit more in detail later on. They have a slightly different model, but it's still fairly attractive. Some of the negatives were that since kind of the last couple of years, there has been increasing competition, especially in big cities. So, there's increasing that has led to some kind of, I guess, competition in terms of pricing. And what was in this study, what was found in the study was that movie and higher quality rooms perform better. So kind of the barriers to entry with escape rooms are quite low, but those that have kind of IP around them, maybe have a kind of following already, tend to perform better. They also mentioned that digital performance was a factor in growth, kind of search engine optimization, paid media, or pay-per-click, which is actually something both myself and Anthony have significant backgrounds in. That's our kind of our career or our day job. The one thing that wasn't in the study was that there hasn't been, from what I'm aware of, there hasn't been any study on the kind of location aspect. What's the population minimum or the ratio of how much population is necessary per location? For example, I'll be talking about a comparison in this deck about Domino's Pizza, which is a franchise business in the takeaway space, whereby there was a thesis that at the start that in the UK at least, that it could support 500 stores. It was later expanded to 1,000, and then it was later expanded to a store within a mile of another store. So that kind of location piece is quite important. It's an unanswered question, but I thought it's worthwhile putting it in there. Anthony, have you got any thoughts on this so far?
In terms of the total market, I'd be interested. I was just trying to do some calculations. How many games and how many players you think each venue can, at capacity, hold each day? And from that, working out the actual value of the market.
Yeah, it's a really good
my
question.
numbers came out quite small, kind of like 1 billion to 10 billion, which I'm sure it could go a lot higher than that. I'm just looking at your current numbers, not the actual growth potential. But it'd be interesting to see how big it could grow.
That's a really interesting point. And actually, there's something I didn't delve into with a specific slide, but I am aware that on Escape Hunt's website, they suggest 4 to 6 people in each room for about 45 minutes.
So they could run hourly sessions back to back, we think?
Yeah, but I don't know. I think the pricing varies. But that's really interesting. So I didn't actually look into... So the pricing, I think it's £10 to £20, but I think that needs to be tested. And it's 4 to 6 people per room per 45 minutes. And you never know, there might be, I think it's probably, I think it's probably like that. There are other revenue streams, which we'll talk about a little bit later. But all of these are, I would say it's a very immature market, i.e. apart from this fixed pricing element, there are lots of other things which are kind of a little bit elastic, and I'll talk about that a little bit later. Yeah, which makes it quite hard to forecast revenues.
It looks to me, I haven't done an escape room, but for my stag do not too long ago, we did a VR experience where 6 to 8 of us ran around a warehouse wearing headsets. It strikes me it's a very similar business model and a direct competitor.
That's right. Yeah. So the space is called experiential leisure, and that actually can cross retail or in person, and I think you can also class as AR, which is I think something probably that you did, or virtual reality. And we'll talk about it a bit later. Since COVID, there's been some other kind of variants which adds revenue lines. All right, so I'll move on because there's quite a few slides in here. This is just kind of other trends in the market, what I was saying earlier about what people are doing in terms of the pandemic. So this was like an online one, this small one here. There's collaboration with a charity. These are kind of downloadable boxes where you can kind of print them at home. That's one variety, or you can just buy the boxes. You can see here, this is a collaboration with a museum as well. And here, the big one, we've got a collaboration with, with Peter Parker or with famous people. So that's around something famous. Although looking at it, it doesn't strike to me like it's super famous. And we'll talk about piggybacking off big brands in a minute. First, I'm going to talk a little bit about franchise businesses in general. What makes them work and what makes them kind of not work. Anthony, do you have anything on that actually?
Not at this stage. I'm just wondering whether the bigger market is the in-person market like this, or like with computer games, most people playing either first person or kind of group-based shooter games. Many people now connect from home, even if they're playing collaboratively in one team against another. I wondered if the bigger market here is going to end up people turning up in person, or actually the home market where anyone at home with a headset could join in.
That's a really interesting point. And because they've only launched a lot of this year, this is not Escape Hunt, by the way, this is the competitors, but you'll see that Escape Hunt has done similar things. Numbers haven't emerged just yet, but I think that is exciting. So before we talk too much about the actual business, let's think about what makes a good franchise. So I invested in Domino's Pizza in the UK. This is one of my first investments, I don't know what year it was, maybe 2007, 8. I invested when it was valued at 100 million. It was a franchise, so it wasn't the master franchise. Domino's Pizza is an American business, but they had a master franchise agreement. This is quite important to understand, actually. We might do a video just about franchises where we can go for a deep dive. But anyway, I invested in the UK franchise of Domino's Pizza. And some of the benefits were that it had a high franchising fee from the start, high demand, and we'll talk about the implication for this in a moment. High demand because it's a fantastic brand, really good products, nice pizzas, etc. Actually, funny story, I didn't try the pizzas for about 5 years. The first time I tried the pizza was actually at one of the AGMs. And actually, I was the only investor at that AGM. It was just me and the board and maybe one or two fund managers. But anyway, high density per square mile, which is something that I mentioned earlier. That's an offline trait. Online potential or software as a service. I mean, Domino's Pizza has got the click and collect or order online, and they've got their own app. So that's something we can talk about with Escape Hunt as well. Grows in any market, down or up. I think that's really important. We'll look at a stock chart in a moment about how Domino's Pizza did in the last economic crisis or recession. High returns on capital, fast payback to franchisees and master franchisor. That's really important as well. We looked at the study a moment ago where it says you might expect 100% return. That was back in 2019 in the escape room market. Let's look at that a little bit later. Interestingly, Domino's Pizza was the biggest player in the market. Actually, it wasn't the biggest player when I first invested. Pizza Hut was bigger, but it became the biggest player. And the other thing is there was a kind of prevalence or a lot of local competition versus the big brands. So I don't think that's a bad thing if you've got lots of small mom and pop shops like mom and pop pizza stands or companies or shops, etc., restaurants. So let's think about how that compares to Escape Hunt. We can see that there's demand in the market. We know that that's gone up and up. There might be demand from franchisees. Let's see. Is it a growth market? Let's see. And let's think about the market potential. I'll talk about that in this deck. I'll also show you what's happened with the story of Escape Hunt. It's got a kind of interesting story. So this is really, I think it's really encapsulated in these share prices charts. I started investing when Domino's Pizza was valued at 100 million. It's now valued at 1.6, so it's a 16x improvement. And I think the dividend yield was about 5p at the time. I don't know what it is now. I expect it's a lot more than 5p. Anyway, that's that. If we think about the recession, kind of kicked in about here and went on to about 2011. So the price went from about 100 to about 200. If you invested at the low, you'd have got it for about 50p. Can't remember. I think I mostly invested between 100 and about 250p. And then I sold most of mine in 2016 when it reached about $1 billion, because I was buying a house at the time. So that's what happened with Domino's. What about Escape Hunt? Well, it's interesting. It floated pretty high in 2017. It had a lot of institutional backing. Interestingly, Domino's Pizza didn't have much fund manager interest or institutional investment, pension funds, whatnot. Escape Hunt does. It had a lot of people. It had a lot of people from the start. And what's happened? I read some of the documentation here, and the precipitous drop in the share price is mostly due to one of these big players with a big investment in the company going bust for whatever reason, and they had to liquidate their shares quickly. I don't know if it was here. I don't really know when it was, but I also think that the institutions may have sold when there was calls for capital. So there was a raise, fundraise of about 3.5 million around here. So I imagine that the price dropped from 50p down to about 5p. I wouldn't be surprised if that was the combination of the equity ask, and then COVID was about March, and I invested at 16p about a couple of months ago, maybe a month or two, and now it's at 36p. So and this deck is really, can it bounce back to 150, or will it go bust? That's basically the thesis of this presentation. I think it's what is known in the trading world or investing world as an asymmetric trade or asymmetric investment. It's not a kind of a value play, I don't think. I think instead it's the kind of investment which I'm not going to lie, I think it could go. There's a potential that they could ask for more money, or if they can't raise the money, they could go bust. But at the same time, I think I'm going to explore all of the growth potential, or some of the growth potential, and I think there's both. I think there's a lot of growth potential, both within the stores themselves, products horizontally within product offerings, which we'll talk about, and geographic potential as well as owned versus corporation stores, owned stores versus franchise. So there's a lot of different potential here. So let's quickly talk about the business, and then I'll open the questions up to Anthony as well. So Escape Hunt is the largest company in the world for escape rooms, which is something I didn't actually know when I invested in the company. I thought it was big, but I didn't know it was the biggest. Note that the actual percentage of the market is very low. 250 rooms, it's less than 2% of the total 14,000 rooms. It's got 40 locations. To give you kind of context, the biggest supplier in the US has 35 locations. So Escape Hunt have got 40 globally. We have about 8%. I think that's right, of games. But either way, it's a small percentage. Geographically, I think it's really interesting spread. We're going to look in more detail about where those locations are, because you might have some questions about that. So this is the split. All of the UK are corporate owned, all of them. They have 2 in Birmingham. The rest are single stores. Note that they have none in London, which is interesting. The closest for any UK people that are aware of the UK would probably be Reading or Watford on the outskirts. Cheltenham maybe. Kingston's kind of south, just outside of London, I guess. These are all corporation stores. They had their hurdle rates, which is a fancy word to say their goals for the board, were on return on investment or return on equity, return on cash maybe. And I'll go into the detail later on, but they've smashed those targets in 2020. And look at the franchise spread. You can see that they've got a lot of stores in France. Presumably that's because they had a strong master franchisor who was just keen on rolling out in France. In terms of population, Portugal has a smaller population than France, only about 9-10 million. Norway, again, these are fairly small, but I think there's probably room to expand, definitely in Spain. And I've got a few other countries. I think I've mapped out some of the other countries where I think it would do well. But you can see that at the moment, the plan is franchise outside of the UK and corporate in the UK. I think this is a good strategy, and I'll tell you why. I invested in Domino's Pizza UK. I also invested in DPP, which is Domino's Pizza Poland, who invested in different countries. And I think sometimes the geographic spread when you're early on in a franchise can have logistical challenges, not just linguistic, but also a range of other challenges. And I think having a franchise model abroad is probably a very good model from a logistical perspective. It means they can test in the UK and give, obviously they can learn from the franchisees as well. But I really like this model. Everyone's based in the UK, I believe, on their board. So I think that's a net positive. You can see in Australasia, they've got a few offerings in Australia and Singapore. Note that there isn't anywhere in core Asia. You know, obviously, China and Japan would be massive in terms of gaming. You can also see that US is very, very low. I'll talk about that in a moment. The Africa and the Middle East is also not covered that well. So I think there's opportunities here. We talked about how many stores could be supported per square mile. You can imagine that Dubai might be, you know, with all of the stag do's and the international and the tourist market, as well as the local market, you know, I wouldn't be surprised if they could support 10, you know, 5 to 10 stores just in Dubai. That's just one example. The same is probably true in other cities. So what about this opportunities, the geo or the regional opportunity? Well, I think that the high populations is just from Wikipedia. But I think there's a few, I didn't do the highlights, by the way, that was from Wikipedia. But the things that the countries where I think there's a really good opportunity is Germany and Poland, I think are good. Spain, France, we already know they've got a number of stores. I also think Eastern Europe and Scandi, because they're cold. You might think, why would that be an impact? I would assume that when it's cold, things that are, you know, when you want to have a leisure experience, you want to go out with your friends, you want to do something inside, and I would imagine that something like this could be quite a fun experience to do on the weekend when it's cold in places like Poland, Ukraine, you know, Kazakhstan, blah blah blah. And I think the Scandi countries, from my knowledge, tend to be very good at logical games such as chess, poker, and things like that. Also, the population, I think Poland, Ukraine, they have high populations. What do you make of that, Anthony? So far?
I think this is an interesting space. I take your point about some of its potential. I do wonder if we can come up with maybe 2 or 3 scenarios. Now, you said, for example, there's a potential for 10 stores in Dubai. Having been there relatively recently, I don't know for sure. I suspect that's the best case scenario. It'd be interesting to also consider if we thought the most it could support was, say, 4 or 5 and 1 or 2. And then we would have a pessimistic, middle and optimistic scenario. And then you could see how big that scales. I think my gut feeling is that this is like a modern equivalent to, say, Laser Quest. Maybe the economics aren't quite the same, but if we could find a similar model like that and see how that's expanded over the years, that would give us a sense of the potential for this one. Because although there's analogies to Domino's, I think fundamentally it has a few weaknesses relative to Domino's. If Domino's ticks 10 boxes, I think this ticks probably 3 of the 10, but no more.
Yeah, I agree. Sorry, the viewers, I think it's misleading for me to compare it to Domino's, because I agree with Anthony. What you're saying 100%, that there's a lot of things that this company doesn't do. For example, you can't order. You probably wouldn't want to go to an escape room once a week, whereas there are a lot of Domino's fans that will order once a week. Some might even order twice a week. So yeah, it's a different model. I'll talk about some of the risks later on, because there are risks and there are downsides. So I think I'm going to start with the positives and then we'll move on to the negatives. And in terms of that scenario modeling, I've done a bit for the US. So I'll show you what that looks like for the US. It's super back of the napkin, if you like, or a fairly fast spreadsheet. But I think it gives a kind of interesting view, and I'd love to chat through that with you, Anthony. And of course, any viewers watching, either now or in the future, feel free to comment. Okay, so the next few slides, I'm going to talk about the update from the company themselves. So you can see the revenue growth. I think this was summer 2020. So this was unaudited revenue. And you can see there's been an uplift from 1.1 to 3.8. Like for like is good. And EBITDA, earnings before tax, depreciation, and amortization, that's the kind of standard earnings, earnings kind of abbreviation, is ahead of expectations, which are all kind of net good things. So the revenue is good. It's in line with expectations. Doesn't look like it's a huge difference there. But you can see here that they think US is expected to deliver significant growth. So that's the thing that I've modeled out that I'll talk about later. So there is at the moment still a loss, but I think there are some positives. Yeah. So I think the UK is
based on its current market cap. We think it's valued at what, about 10 times revenue.
Yeah, that's right. Yeah.
Which is relatively rich, but if you think it's going to grow quickly off a small base, maybe in the next couple of years that ratio could come down significantly.
Yeah, like I said, I think this presentation is not going to differ too much away from that asymmetric return kind of model. It's not like a utility or something like that. Anyway, so let's carry on then. So what are the positives? Well, the team's pretty good. They have a very good mix. They've got, I think they say they've got some entertainment, but it's a mix, which I think is probably a net positive. They're obviously public, so they can negotiate with landlords and they can do things at scale. And they're global at the moment. 24 countries, which is bigger than most. They say there's weak competition. Inconsistent customer experience, poor locations, poor games, no tech integration, weak brands that are undercapitalized. So I think that's an interesting point. You can see here that they've got the IP, obviously, for Alice in Wonderland or something around that. Okay. This is the last line, I believe, within the Escape Hunt numbers. So they think there's strong growth in this experiential leisure field. As I mentioned, this is the IP stuff. Site economics are now proven. This is the thing that's just interesting. They think there's attractive site commercials, positive cash dynamics, 10% cash return in 1 year, 25% in 2 years. There's been another update to this, which is even better than this. So that's the kind of return they're expecting. UK is good growth, international. So they've invested 20 million in the group, and they haven't got as much cash of that left. But sorry, go on. Did you want to say something?
Yeah. I think the cash return on investment figures are very interesting. Do you know what the early stage figures for Domino's were like?
Domino's, yeah. Domino's is somewhere between 20 and 30%. That was kind of like consistent across. Even when they got more cash in, they basically paid it out as dividends or as advertising. Mm-hmm. So after about 5 years, they started to like ramp up advertising. So I think they were targeting about 30%. And I can tell the listeners or watchers here that in 2020. Before the pandemic, the return was 31%. They're expecting 19%, but it was actually 31%. So that's kind of good. So here I wanted to talk about this US model here. So they're going with this company called PCH. It's an investment company, but they roll out brands, right, as a master franchisor. They've rolled out some American brands. If there's any American audience members, they may have heard of these. I actually haven't, but it sounds impressive, and it sounds like they've got some expertise. Papa Murphy's CPR, that's the cell phone repair store. Pros, Miracle Method, Online Training Academy, and Pedal Pub. I did read it at the time, and it kind of felt like they were probably a strong kind of person or group to help with this rollout. So basically, I've modeled a forecast based on these numbers. So basically, for the first 10 stores, blah, 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 they're going to pay 50K, right? And then after that, it's 25K for each sub-franchisee sold after that. And then the company will receive 5% of a revenue share. That's kind of a little bit harder to model out. So I've guesstimated that a little bit, especially with the fact that they're rolling out different products. No one's really sure about demands. And they've also got an annual service charge which is about, I think it's $600 a month. It's about, no, 500. I've modeled it as 6K a year, and that pays for the game development. So you'll see in a moment I've modeled this out, and you can see what it kind of looks like. So basically, the PCH have the US and Canada. They've got the market. They've only got 2 stores at the moment, and I've got worst case, mid case, good case, and best case, and I've got an amazing case in the next slide. But you can see here with 4 stores, this would be adding 2 more. You know, in the next kind of in the next kind of year and 9 months. You know, they'd have about 224,000 revenue. Note, this is our revenue, not the franchisees. And a 20x multiple on that is 4.4. If you add in a little bit more for that revenue model, let's say 5K a year per store, you get to 4.8 million. That's like the worst case scenario in a year's time. If they add, remember, this is the US and Canada, a population of probably over 300 million. So this is the same size as Europe, basically, in terms of a similar kind of population as Europe, and high disposable income with probably a high interest in things, popular culture and whatnot. So the worst case, I think, is probably like 15 to 20 stores in the next 5 years. Remember, they can onboard sub-franchisees. If you think of France being a similar model, they've got 10 stores. I think that's one sub-franchisee. So PCH could probably build, they could probably build 5 a year or whatever, and then have another sub-franchisee in Canada, let's say, or maybe the West Coast, building other stores. So that's why it's really interesting to look at the mid case and the good case. If we think of the mid case as being a rollout of PCH only, and we look at 35 in kind of 4.5 years or 4 years and 9 months, that's it's roughly around 6 to 7 a year, 1 every 2 months. I don't think that's unattainable. I don't think it's like a stretch case. I think it's a mid case. This is the total franchise revenue. This is the 6K per store for the game designs. The revenue is that. The 20x on the revenue is $25 million. Plus 5% of that revenue figure, we get to 29 million. Now, what about if they onboarded a fantastic, couple of sub-franchisees, let's say on the West Coast and Canada? They could probably get, let's say they build 30 to 35 themselves in the next 4.5 years, and they get someone really good in Canada that gets 10 stores, and someone really good on the West Coast that gets 10 stores. They could get to 50. And I'm thinking about 40 million. This is not building out other revenue lines, such as the product spaces we talk about a little bit later on in the deck. I'm base casing it on in-person traffic and corporate, basically. So that adds 40 million to the valuation. That's on a 20x, of course. Just to give you an indication, Domino's, the highest valuation PE multiple of Domino's, I think it went up to between 35 and 40. So that could potentially be 80 million dollars.
My question about that, these figures, I treat this more from the perspective of the franchise owner that's selling the franchise. I'm not sure if I treat this so much as earnings as total revenue, because out of these earnings, I have to pay for my development costs and other things. So if this is 20 times price to sales rather than 20 times price to earning, that would make it a very rich valuation.
This is, sorry, I should have been clear. This is the revenue the franchise owner, like the store owner, gives to Escape Hunt, like PCH.
Yeah. What I'm saying is this is Escape Hunt's revenue, not their earnings, because out of this revenue,
remember that they're so in the model
they have costs.
They have no costs for this.
You're saying that they're getting a fee for game development. They have to develop the games that the franchise uses.
So there'll be cost there. So I say there's going to be no cost. There'll be minimal cost. There'll be the game development, which as you can see, when you get to scale, let's say there are 15 stores. No, actually, this worst case scenario, let's say like 4 stores. They've still got quite a lot of money for game development. $25,000, 25 to 60, let's say, for 4 to 10. That's still quite a lot of money for game development. Remember that, it'd be interesting. I actually think, looking at it from the other side, it'd be interesting to see how much it actually costs to develop a game. Maybe there's a cost with IP. Maybe there's a cost to the BBC or the other partners.
I don't know, but even if you thought it took only 4 developers full time for 1 year at a moderate salary of 50,000 each, you'd be looking at £200,000.
Yeah, but Anthony, that's the point. But you're talking about virtual. I haven't modeled anything virtually. This is all in store, so this is physical games. So it's things like
okay, so
and tokens and icons, and it's like fitting out a cafe, or maybe not as expensive as cafe.
You're right. I'm assuming it's all kind of augmented or virtual reality with headsets and software.
Yeah, this is all physical. That's why I think once you've got a printout or the interior designer, because they look fantastic actually. Maybe it's $100,000 a game or something. That's what I'm kind of assuming it would be, but I need to clarify that with the company. But you need an interior designer. Presumably they've got someone full time and they just pay them $100,000 a year, and they can develop more than one game. Maybe the brands, maybe the BBC help design. I don't know, but it's all physical. Yeah, that's why I think the cost is quite low. Is
there any way to get a handle on what those costs have been to date? To try and kind of understand the real profit margin?
I think we could. I think the proof of the pudding, I think, would come from this is not really a deep dive. This is kind of a first stage for me. I think the next steps would be to go deeper in terms of game development costs. What have been the costs of lockdowns? Because you never know, there might be more lockdowns in the future. Things like that will probably come out in the annual report. And I'd like to attend the AGM and ask some of these questions. You never know, maybe if this channel grows, they might even jump on and we can ask them personally. That'd be awesome. Maybe not, let's see. But this is a guesstimate. I don't think it's far off. I think maybe the good case and best case is a little bit optimistic, but I certainly don't think 35 stores for an entrepreneurial franchise, master franchise, or like PCH in America and Canada. I don't think that's that unrealistic. That's somewhere between 20 and 30 million for the physical stores only.
It's less than one per state capital, put it that way.
That's right. And if you think about how many that in America, they'll class them as small towns that have 1 million people. There's probably 50 to 100.
I mean, I agree. If they can support a store in Basingstoke, there's lots of potential in America for cities of that size or above.
So that's the interesting thing. If it works, it will work for. If it works for 35, it could probably work for 500 or 1,000. Which leads me, I think it's worthwhile to have a look at an amazing case. An amazing case, I think, would be, what if escape room demand continues to increase? What if they can grow 10 sub-franchisees, so that each of them have 10 stores each? What if Canada also has, a growing market? I've just mapped out 125, but if you were going really aggressive, you might want to think about 500 stores. But just doing 125 for now, just on the physical earnings and valuations and stuff, I've mapped out 89. This is kind of back of the envelope type stuff. But remember, they're valued at about 30 million now. I don't know if that's in dollars. Maybe it's about 40 million. So it's not really including much of this. If we go back, I think they've included somewhere between 10 and 32. That's the US opportunity has been valued at between 10 and 35, which I think is low because the current market leader only has 35, and I don't think they're as well capitalized or as well as experienced as Escape Hunt. So that's the kind of positive case that if we could grow to over 100 in America, you could have on 20x valuation, you get like 90 million added to the market cap. If it was considered a growth stock by that point, I think that the funds and the institutions would reinvest. You remember that stock chart went from 150 down to 5. I wouldn't be surprised if it went back up to 150. That would value the company at 150 million pounds, which if we convert this into pounds at the moment, it'd probably be somewhere like, I don't know, 70 million. Add on the 36, 100. There'd be a bit of a bit of excess there. But if it got 100 stores, then people would want to map in extra growth, because if you got 100, you could probably get to 200, 300, 400 in the US and Canada. So that's the bull case, if you like. I think the bull case is that
I think.
Yeah, go on.
I think my concern is that even if you thought it could support 300, 400, 500 in total, and that was kind of the saturation level, given that there is competition, they're not going to own 100% of the potential stores.
No, that's true.
Unless you think that's how many this brand itself could support, even with competitors in every city.
Yeah.
And if I thought that they had got more than 30 to 50% of their total scale, I wouldn't be valuing them at a PE of 20 anymore, because I would be seeing constant rapid growth, and so certainly probably no more than 15 as a multiple. I think would be what I'd be looking for at that point, just because for how many more years do you think they could sustain the growth rate before it had to slow down due to lack of potential to scale?
Yeah, well, I think there's a couple of things there. Two points. The first point was about saturation and competition. I think in other franchise fields, I don't think you would need 100%. For example, Domino's has a lot of competition from McDonald's and things like that. In the leisure space, you would have competition in things like Laser Quest, the cinema, other escape rooms, of course, but I think what they're saying is probably right. Basically, anyone can start an escape room. You probably only need 50 to 100,000. But if you want to develop really awesome games, if you want to expand, it's probably quite hard. And Escape Hunt might be able to, at some point in the future, drop prices to, if they wanted to kind of crush the competition. I think they're likely to be in a decent place. So I think that there is less risk there from that.
The way I see this is two types of experience. To use the pizza analogy, if you can eat pizza several times a month, even several times a week, well, let's look at bowling, a very popular indoor sport in America. You have bowling leagues where people might compete on a weekly or monthly basis. They might practice in between those games just to improve their skill level, or play with family as opposed to the league. Can we ever see this experience being one that you would do on a regular basis because there's a league you compete in? And if not, then you're never going to see this support the same density as, say, the number of bowling alleys. And you'd have to scale it back in proportion to use that as a model.
Yeah, it's a good point, right? So let's think about bowling alleys. You're right. Bowling alleys is a sport. This isn't a sport. This is like a leisure activity. I would imagine that you'd have enthusiasts like you have enthusiasts for bowling that go every week. I would imagine that you would have people that go with different friends, that create competitions, but probably not as much as bowling. But the interesting thing about bowling is I don't know if they have a return on capital of like 20, 30% a year, because bowling alleys are really big and really expensive. I don't know if escape hunts need to be very big. That's number one. And number two, like they get the revenue. They get the revenue when people sign up. This is a one-off fee here. The things that carry on as revenue is these two lines here, the 6K per store, and the slight increase on the 5K per store as well. They're the reoccurring revenue, if you like. The rest is one-off revenue. So you're right, there is a risk there. But I think the actual risk is not on the market saturation. I don't think it's competition. I don't think it's frequency, because they already get 20 to 30% return on cash. I think it's the fad nature. I think the biggest risk is, do people just get bored of going to escape rooms and just think, fuck this, I shouldn't say fuck, I shouldn't swear, but do people say like, I don't want to do that anymore?
So let's turn this model around a bit. Let's assume that they can, whether or not by 2025, I don't know, but let's assume they can get to 125 own brand franchise stores. If you want to just stay on this page for a minute.
Yeah, sure.
But let's assume that rather than this being a stepping stone, this is the terminal position they get to when they've saturated their market in the existing formats.
Yeah.
Bearing in mind there will be competition and all the rest.
Yeah.
If I assume that they could sustain this level but not grow significantly from it, then the maximum PE I'd be willing to give them is 10, and perhaps a bit lower if I thought that maybe they're plateaued and the risk is to the downside rather than up. This is still a good place for them to get to, but we'd have to get them a lot less rich valuation if there's limited future growth.
You're right, but there's a couple of things which I think give it. Again, it's the bull case. But if they can't grow, let's say you're right that in the US and Canada, the max potential is 125 stores thereabouts. They get this kick of revenue of like 4 million or something as a one-off, and then they're just making $1 million a year of recurring revenue. So you've got a locked in, if it's 10x, you've got a locked in 10 mil a year from the US and Canada, and you've got that one-off cash injection. I think if it gets to 125 for Canada and America, I think you've actually got a stable ground for global expansion. And you might say that if you get 125 in US and Canada, you've probably got the room to grow to 1,000 stores globally. And that means a 10x valuation of what you've just said, if we halve the 90 million to about 40 million, let's say, you can probably times that by 5. So then you get to 250 million. It's now valued at 36. So I think maybe we can meet in the middle. And remember, this is the physical stores, not the virtual.
Just my favorite pastime, playing devil's advocate. The American economy, although 5% of world population, I just Googled it, it's 20% of the world's income by GDP. Now, of course, China, India, there are countries growing quicker, but to use the current position, if they're 20% of GDP, I might assume that there is a room to scale this globally by a factor of 5. And some of that growth has already happened, though not all of it. Yeah. So we'd be looking at 700 to 800 stores, maybe by 20. Okay, but in a few years' time, with the economy growing, you're saying you could get to 1,000 stores.
Well, I think so, because I think so for 3 reasons.
But that's the best pace. That's kind of global saturation point with no growth left anywhere other than in line with growing global GDP.
There would be other growth. There's 3 elements that I think would increase the valuation. Just on this point, this is again, we haven't talked about product innovation, but thinking about the retail stores. Number 1, the most common thing that if the guys did do well and get to even half of that, even 50 stores in America, they would have so much money that the mom and pop stores, which are going in quite aggressively, putting in 100 grand of their own hard-earned money, and maybe scraping by with 60k a year. Maybe after 5 years, they think, I don't want to do this anymore. And Escape Hunt comes in and say, we'll buy your store for 200 grand. So I think buyouts are an interesting way where they could probably buy a lot of those mom and pop stores. That's number 1. Number 2, we've already talked about. I think we both agree that there's a geo opportunity, there's a regional opportunity for growth. And you're right, once that's done, it's done. And number 3, I think there's an evergreen model for an increasing valuation on pricing. If inflation is going to come back globally, which I think it is, I don't know if you'd agree with that, but it's a separate conversation. But I think that you mentioned about the US and GDP. I think that this price point will be affordable around the world. I think if you think about Scandinavia, which I mentioned earlier, think about Eastern Europe, I don't know how much the price is to go to one of these. It's probably somewhere between 10 to 20 pounds, dollars, euros. Like even before the pandemic, where everyone's cash rich, with all this furlough money and stimulus money in their pockets. I think people will always be able to afford this. So the question then goes back to, if these 3 things are constant, that they can buy people out, they can grow geographically, and they can increase their pricing. It still goes back to the main question of, is this a fad or not? If it is a fad, like all of these things don't.
Have you ever been to any escape room anywhere?
No, but remember, I didn't try a Domino's pizza for 5 years, and it grew by about 5 times. So,
sure. But in that time, did you eat pizza?
I did eat pizza, but
just not Domino's.
Not Domino's. But
whereas you've never done any escape room, not just this brand.
But it's interesting because you know how many people have asked me to go to an escape room in the last 2 years.
How many?
I think it's about 3 or 4 separate groups of friends, and I've been invited to birthday rooms, and my partner has said we should have a birthday party in escape rooms. That's 4 or 5 times. That was pre-pandemic.
Fair enough.
So I think that I don't know if that's.
Have you had more than one Have you had more than one invitation from the same person, i.e., any repeat requests from the same group?
Yeah. They've mentioned it like more than once because these same people have been to more than one escape room. So they've said, I've been to this one, and I've been to this one, and I've been to this one. So it's all small scale, obviously just my mates. But I wonder, I think, that's an element, testing the products is really important. There are famous investors and traders that do like to do that. I think if I were to invest in a big way in Escape Hunt, this is, I haven't invested in a big way. I've made a decent amount of money, but it's not a massive share of my liquid assets. I would want to go to an Escape Hunt. I'd probably want to also go to other, escape rooms and talk to the staff and all that kind of stuff. All right, should we move on? Because there's still a bit more to get through, right? So these are those products categories we talked about. So I've highlighted in green because I think the Escape Hunt retail is something that's pretty much what they're doing to date. That's what they've grown in. That's where they've seen the revenue growth from $1 million to nearly $4 million in mid-June, I think, of 2020. Now, the other things they're looking at is this Escape Hunt for Business, which is the corporate play, which they are saying, this is from some of their documentation, that it could be up to 25%. And they think the longer-term potential of corporate expenditure is bigger. So that's when they do things for brands. They've done some stuff for Virgin. I think it was Virgin Media or Virgin Tourism or something. And you saw earlier where escape rooms partner with museums and things like that. It's obviously corporate away days and team building is a big thing. You can see here team building on their website. Escape Hunt for Education, I think it's interesting. I wonder if a school would hire out. I don't know. I haven't they haven't gone into detail about what that is, but I wonder if at some point in the future they can have an escape hunt just for schools and universities. I think that could be really interesting. Escape Hunt for Brands is where I don't know what that is, but it could be branded in a certain way, maybe collaborations. Companies like Croc are doing these collabs. I wonder if someone like, I don't know, Red Bull or Marvel or someone else would want to do an Escape Hunt Disney collab or something. I think that's an interesting potential. And this play at home stuff, both physical with the printout model, or boxes that the people can buy, and as you mentioned, the virtual. I think there's quite a few areas of product category growth potential. Yeah, what are your thoughts on that? Are you there, Anthony?
I think it's a little bit tricky without putting numbers to each one. I mean, certainly, yes.
It's very early. Just to give the viewers and the listeners some background, we don't have any numbers on any of these things. The only thing we have numbers on that I can see at the moment is retail. We've got this estimation about corporate, but there's so much opportunity here. I think these are all kind of like if we go back to this is based on just this green one, basically, maybe a little business as well. It's probably the first two. But we don't know about the revenue from virtual or stay at home yet, because they haven't released their numbers. So that's kind of interesting, I think. So this was talking about the return on capital. So they modeled it at 16.4, but basically the 26 to the 1st of March, kind of pre-COVID, it went to 31.9. The 6-month return, would have been 31%. So they're really confident about expanding in the UK, which I think shows it is quite interesting. They have 2 stores in Birmingham, the UK. For people that aren't based in the UK, Birmingham is the second city, has a population of broadly 2 to 4 million. When you kind of expand out to places like Wolverhampton, Coventry, etc. And if that can successfully handle 2 stores, then it's likely that a lot of the other big cities could have 2 stores as well. Places like Manchester, Leeds, places in Scotland like Glasgow. So I think that's interesting. Again, it doesn't answer the question, is it a fad or not?
Hi, can you hear me now?
Yeah.
Sorry, I managed to mute myself, I think, and couldn't see the button initially. I think the trick is to try and, obviously there's many areas they can expand into, but how readily can we model the value of any of them?
We can't. This is very early. I think this whole deck is early because I invested Domino's Pizza at 100 million. I could have invested probably at 40 million. And that's the risk that investors take, and there's the decision they need to make for themselves. I've outlined all of these growth areas. I've forecasted America. The
figures you're citing, the market cap, are they?
Sorry?
You're talking about 40 million, 100 million market cap or annual revenue?
No, here I'm talking about the additional add to the valuation. So the revenue, the one-off revenue, if they got 125, the one-off revenue would be 3.8, right? 3.8 million.
What I'm asking is the annual revenue of this business is what, 3.8 million sterling?
At the moment, yes, sorry, at the moment, yeah.
At what point in Domino's history was their annual revenue equivalent to $4 million? To make it a like-for-like comparison.
It's a good question. I do actually have some annual reports from about 2007, but I haven't got them to hand.
I'm guessing that even in 2007, their annual revenue is probably 10 times that or higher.
Yeah, I think that
I could be wrong.
I think that we can both agree that the Domino's the Domino's customer is likely to order maybe 5 or 10 times a year, whereas this person might go once a year if you're lucky, on average, over 10 years. But it's these other product elements which I think might balance it to be equivalent to, or maybe not equivalent, but closer returns. I'm more about those, yeah.
I understand that we can't compare the total number of customers necessarily, or certainly not the frequency of order, but can we even, and they might end up with different total numbers of stores, but can we just compare store for store performance?
Yes,
on that level?
The way to do that is to use this universal metric of return on invested capital. So this is known in the accounts for anyone. ROCE, and you can use it to analyze any business in the world, and it's return on money invested. That can be cash from the business, or it can be return on debt if they raise debt. Just for listeners, Escape Hunt actually raised some debt and a convertible note. I think it was 2019. Anyway, the return on cash is the same if it's debt or equity capital. So we can compare, I think Domino's was about 25%, and this is 31.9 at the moment. Remember that we're in a growth phase for Escape Hunt and escape rooms in general. The question for me would be, irrespective of size of location, like bowling, or frequency of purchase, like pizzas, it's this return on cash metric, which is the easy like-for-like comparison between franchisees. So we want to be monitoring kind of that on a year-by-year or quarter basis, because that will mean if this stays above 20%, I think you're always going to have franchisees interested, and that will generate a lot of money. There's something I forgot to mention. So this fee of 50K is really, really low. Domino's charge, when I stopped investing in Domino's, when they reached $1 billion, they charged £250,000, about 300,000. So the other thing that could happen later on, if they do well, is this total franchise fee. It might go up. I don't know how long they've locked this in for. I haven't looked at the contracts, but it might state, for example, that in 5 years, these MFAs, they're called master franchise agreements. They're renewed every, with Domino's, the Domino's franchise had it for 10 years, and then it got renewed. So the master franchise owner, which would be Escape Hunt Global, would set the terms and conditions for the MFA. And they may say, you know what, Escape Hunt has got so popular and so interesting. This is a bull case, by the way. Feel free to argue with the otherwise. But the bull case says that instead of it costing 50K and then 25 for the additional after 10, they say that it costs 100 grand. And actually, instead of this being 3 million, it goes up to 10 or 20 million. So that's kind of another element there, that if they sustain this high ROCE or return on capital employed, that franchise interest increases, and maybe in the MFA agreements they can increase the costs.
For which year is your return on capital employed figure?
I think this was June 2020 it was released. So they wanted to release something to market. I think it was June 2020. And they're saying for the 26 weeks to the March 2020, was delivering annualized 16.4. But several factors, new sites, I think the lower costs basically mean that it's going to go up to 31. So I would assume they've talked about relationships with landlords, and I think they've negotiated lower costs from landlords. So maybe that's an element. They don't go into detail whether the other product categories, whether any of these product categories add into that 31.9%. It seems that it seems like it's from a cost basis. They've got the cost down, which naturally increases the returns. So that's interesting. So what are we missing? This is kind of the other things, elements. We don't know, as you mentioned earlier, what's happening in the search world online. What about on the ground? What are people talking about? Customers, managers, talking to managers. What about the owner experience? I don't know any of those things. I know that on the website, it said that Escape Hunt is in the top 4 on Trustpilot for reviews in certain cities. I can't remember which cities. So it seems like it's valued quite highly. But there is areas where we could go into a bit of a deeper dive. Later on, we'll probably produce a more in-depth document, which will have more information on some of that research. I'm going to stop the presentation there and open the questions to Anthony. So just here we go. Anthony, you're back on the screen. Anthony, you there? It's kind of frozen a little bit. And Al, my friend, is listening with interest. So I'll just comment to him.
Yeah.
You're back on screen now, Anthony. So I've finished the presentation. Any thoughts on,
yes,
on anything you said?
Can you hear me okay?
Yeah, I can hear you. Can hear you.
This line isn't working, isn't it?
No, we can hear you. Yeah, we can hear you.
Oh, okay. I was just looking on Google Trends, the search volume for escape room. I don't know if you're able to bring that up.
Yeah, I've got that.
Can you bring up the Google Trends search volume for escape?
Yeah, I've got
in
that.
Recent years.
1 sec. Just give me a moment. I will bring that up. So I've got it in front of me. Some of this, Anthony, I want to share later on our website that users can download. But I've got it in front of me. Basically, there are massive spikes. This is consistent across the world around Christmas. So people love this as a Christmas activity. In the US and worldwide, the interest went up to 100% over Christmas. So that's an interesting thing. Maybe it's both corporations and individuals who like to do something like this around Christmas time. But it also looks like the interest went from around 15.
Can you show the chart?
Yeah, 1 second. I will. Just give me a moment. Like I said, I put most of the time into those other slides, but we will have more.
Can you show us? Yeah.
Yeah. Just doing it now. Here we go. Let me just share this. Share the screen. There we go. Can you see? Anthony?
Not yet.
Can you see it here?
No, the connection's quite slow.
Let me know when you can see it, actually. Yeah.
Nothing. No.
Really? Okay. That's strange. You can see it before, though, right? Okay. Can you see it now?
No.
Okay, well, I'll wait because it is telling me that it's sharing this tab. One second, technical problems. Okay, well, let's go off the screen share. Anthony, if the connection's okay, I'd love to hear your thoughts. We can have a 5 or 10 minute discussion now on your general thoughts. I've given the bull case. I think there is a chance. I'll mention my thoughts quickly. Just say, I think it's consistent with what I've been saying pretty much from the start. But I think if it's not a fad, I think this could go back up to the realm that it floated at, maybe 100 million valuation, 150 million plus. But I think there's a risk that it uses up too much cash and doesn't do well. And so I think there's a 50% downside risk as well. That's kind of it's not advice, it's just my opinion. What do you think, Anthony? What's your opinion on this?
Can you hear me now?
Yeah.
Just to check. No, okay, good. So there's not too big a delay here. I think this could go either way. I think what you've really managed to do is sell me on the merits of investing in Domino's, as much as anything else. I do think there is potential here, but my biggest concern, have they raised enough capital to see through these expansion plans that you envisage? And if not, at one point, are they going to have to go back to shareholders or whoever to raise more capital? what's that going to do in terms of diluting shareholders and value? And it, like you said, it's going to go one way or the other, but it's really hard for me to tell which right now. I'd want, for me, it's such an early stage right now. It's just a speculative punt. In a year's time, 1 year into the recovery, you should be able to see how they're performing in the post-COVID world. And yes, you'll have missed out potentially on the early stage growth, but you'll also have a better understanding of, are they growing stores? Are they burning their cash towards zero very quickly? And in exchange for lower risk and lower reward, it might be a chance to actually make a more educated decision. And it's just do you have the stomach to buy in right now with the very limited information and trends available?
Agreed. I think that's a fair assessment. I think that it is very early. There's so many unknowns. I think it's on the downside, 50 to 75% downside is definitely there. On the upside, 3 to 10x I think is still there. Remember, I've been fairly lucky, caught some of the uptick from 16 to 36. Some people invested at 5p, so they've done very, very well. But who knows? I thought it was really interesting to have this as a first stab. We will be doing other investment cases. I've got some other videos in mind. This isn't for me a very high conviction trade or a very high conviction investment, but I thought it was worthwhile sharing with the community. I am going to upload it to YouTube, to our channel. So let us know what you think in the comments section below. Anthony, do you want to leave any closing thoughts before we wrap up?
Nothing at this stage, only to say that in future videos, a few shares that interest me include Chinese stocks like Alibaba and Tencent, JD.com, and the tech sector in general. So we're going to be covering quite a wide range of businesses over the next few months. And if you have anything in particular you'd like us to discuss, leave it in the comments or direct message us, and we will certainly consider those topics and companies for future webinars. That's right, yeah. And from my side, I like franchises. I did well from Domino's. I'm not limited just to that. But anyway, we'll cover more stocks soon. Make sure to like and subscribe. We're on a lot of different channels. We're on Facebook, YouTube, Discord, and Twitch. And feel free to like and follow and subscribe and whatnot. And we'll see you in future videos. Take care, everyone. Stay safe. Goodbye. Guys.